This conference will now be recorded.
You have 2 million.
Okay, we're looking at the journal entries that a fraudulent company makes. And in this case, they start a company, then they fraudulently create revenue by debiting receipts for 10 million and crediting sales for 10 million. So if we went to a trial balance, cash would be what? 1 plus 5 minus 4. So how much cash would we have on that trial balance?
2 million.
Okay. Then the accounts receivable is how much? Based on our journal entries, 10 million, correct?
Yes.
Then we have we got accounts payable. I'll just put the payable here, note payable of $5 million. The common stock was $1 million. Okay. And what else we got over here from our journal entries? We paid some salaries of $4 million, right?
Yes. So your salary expense is 4 million.
So the sales though would have a balance of what? 10 million, right?
Yes.
In the journal entry, creating sales, then the salaries expense is 4 million. So what are our total debits?
16 million.
What are our total credits?
16 million.
And so now can we do an income statement?
Yes.
Sales are going to be what?
10 million.
So more than 10 million. And we're just highlighting these parts of it. Of course, there'll be other things on there. Then the salary expense would come on at what?
4 million.
So our total expenses is 4 million.
When you subtract, you get 6 million.
Our net income is 6 million.
Mm-hmm.
So this is essentially what these companies were doing. Let's look at our balance sheet. How much cash we got on the balance sheet? So
2 million.
everything from sales on down. So if you got your accounts in order, everything from sales on down goes on to the income statement. Does everyone see that? And everything from retained earnings up goes on the balance sheet. So when you're preparing a balance sheet, everything from retained earnings up. Everything from retained earnings up goes on a balance sheet. Everything from sales down goes on an income statement. Is that clear to everyone? for your quiz?
Yes.
Okay. So cash is 2 million. On our balance sheet, what else we got on the balance sheet? Receivables of 10 million. So total assets of what? 12 million. Our debt is the 5 million. So total liabilities of 5 million. Common stock was what, 1 million. And our retained earnings is what? Beginning 0. Add the net income, 6 million. So our ending retained earnings was 6 million. If you'd had dividends, you would reduce it. And so the total retained earnings is now 6 million. So the total stockholders' equity is what, 7 million? So we have a perfectly balanced fraudulent income statement and balance sheet. Those are the financial statements. And the people come to you and said, this is what our business did. We invested $1 million. We made net income of 6 million. We now have 12 million in assets, 2 million cash, and 12 million on the equity side. Give us your $1 million and we'll make you some money too, just like we made money for ourselves. So what you all gonna do? What you gonna do? Are you gonna give them your $1 million that you just won in the lottery?
I mean, that's kind of me personally. I wouldn't trust it.
No. Why wouldn't you trust it? You know.
I mean, why would I trust it?
Well, people in Enron trusted it.
Yeah, but see, I'm not them.
People at Xerox trusted it. So why wouldn't you trust it if you saw those income statements? Let's look at it another way.
Okay.
You are James Harden's financial advisor, and you get 20% of what you invest. And James Harden says, I want a 40% return on my money. Go invest my money. And it gives you 10 million to invest.
Hmm.
I don't want 1% or 0.5% from the bank. Go invest my money. And once you invest it, you can get a commission. So what you gonna do now?
I mean,
See, that's where the people are. People give you money and they say invest it. You gotta invest it.
I know. Yeah.
You just say, well, I'm not going. I can't invest your money. Then they don't
Hey, I
need
mean,
you.
I get my 20% anyway, so hey, I invest it.
Oh, so you're gonna invest it now? So you change.
I mean, not my money, but
Oh, so if it's not your money, you're gonna invest it.
I mean, you know.
That's what's gonna invest though. Gonna invest hard money. It's gone anyway. You're gonna invest his money.
You'd be all right.
Okay, so this is what we run into. And so in terms of what a lot of companies do or did, and they're continuing to do. So we get into the statement of cash flow. So once again, you can see you need to know how to go through and prepare financial statements. Can everybody prepare financial statements?
Yes.
Anybody else besides Buford?
No, I can't.
Okay, so I'm gonna give you some financial
Question?
statements to prepare. So you got a choice. You can prepare them after class, or you can prepare them on Friday. What does the class want to do?
Well, can I do it on today? Because I'm not attending class Friday. I have to work. Sorry.
You said the question was, do we want to do it after class or do it Friday? Is that the question?
Yep, that's the question.
How y'all feel about after class? I mean, it's a group discussion.
Yeah, I mean, I would much rather do it on Friday in class.
Okay.
All right, so I tried to get it ready after class.
All right, perfect.
But so you can see though that, so we'll skip this Friday for you, Buford, but depending on how we're coming, we might need to meet next Friday. Okay, we have what's called a cash flow statement. That's the fourth statement. So I just showed you an income statement, a balance sheet, and a statement of retained earnings. There's a cash flow statement which looks at the cash flows of a business. And it divides the cash coming in from three areas: operations, investments, and financing. For you personally, your cash should be coming in from salaries. Okay. And so when you graduate, you want to have enough salary so that this number is negative. You can buy some new things. And third, you can pay off some student loans. So when you look at yourself personally, that's where you want to be when you graduate. Enough money to enough money, say 2 million from salaries, less expenses, you got $1 million. You didn't buy some more things, you pay off some debt, and you still got money left over. That's what you're trying to do. That's what a company has to do. Okay, so we talked about the fact that when a company is formed, and we just said you debit cash and credit common stock, what is supposed to happen is that your cash is supposed to go up through earnings. Okay, so both of those things are supposed to happen. But if earnings go up and cash don't, there's a problem. Okay, if earnings go up, cash don't, that's a problem. And so always keep that in mind. And so what this cash flow statement is going to do is it's going to provide information on a firm's liquidity and solvency. It's going to provide information for evaluating changes in assets, liabilities, and equity. It's going to tell you you should compare firms' cash flow statements. It indicates the amount, timing, and probability of future cash flows, and very importantly, it aids in the detection of fraudulent activities or just poor business activity. So if you look at the cash flow statement for a company, which everybody has to do in here, and prepare me a report. So that's an individual thing. So you all should be sending to Buford, a company that you work for, you want to work for, and no Microsoft, Amazon's, Apple, just a regular company in Houston. And you're going to look at 3 years of cash flow statements and tell me if you're going to make an investment. And that's not due right away. But the key thing is, as I said, we have operations. That's the cash provider from the company when it sells its it's inventory, it's key item, or whatever way it makes revenue. That's where we want to see cash. We want investments to be negative so the company is expanding. And then we want the company to be paying off debt, though sometimes it can borrow debt. And so as you look at companies, you're going to look at, does it have any money from operations? If it does not have any money from operations, it's got a problem. So whenever you look at these cash flow statements, and these statements are published, the income statement and balance sheet is published, but the cash flow statements are published also. But unfortunately, people didn't know how to look at this statement, so they didn't. They just looked at the income statement. So let's look at how we would prepare a cash flow statement, how we come up with it. Now, you should be familiar, of course, with the accounting equation, assets equal liabilities plus owner's equity, okay? So in Principles 1, we would just look at the cash transactions. But if we got 20,000 cash transactions, we can't get that cash flow statement that way. So let's go on as we derive this equation. And so we also know that assets equal liabilities plus common stock plus retained earnings. Then we know cash plus the other assets equal liabilities plus common stock plus retained earnings. That's that formula. Then we know that cash equals the liabilities plus the common stock plus retained earnings minus the other assets. So we just put the other assets on the other side of our equation. Then we have cash equals current asset plus long-term liabilities plus common stock plus retained earnings minus current assets minus long-term assets. So we break in the assets and liabilities into current and non-current. So, and finally, cash equals the current liabilities plus the long-term liabilities, the common stock, the net income minus the dividends, that's retained earnings, minus the current assets, minus the long-term assets, plus contra assets. So when we're looking at the change in cash, we have to look at it in terms of all of these other assets. We have to look at it in terms of all these other assets and liabilities. Some of the items are going to be operation items to tell us whether that change is positive in operation. And so the key thing you need to know is that if this number is not positive, your company has a problem. Investments should be decreasing. Financing should be decreasing too in a good company. Or maybe going up, but most times, just like you personally, you want to be paying on your debts. So let's look at how we're going to get our statement prepared. There are three parts to the cash flow statements. The fourth part is the change in cash. So this is, the answer to the problem, change in cash. Then we have the amount from operations, okay? And then we have the amount from investments, then we have the amount from financing. And so we got to put these other areas, all these other changes in these other areas. That is, some of the changes are going to be in operations, some in investments, some in financing. And so this chart shows you where everything goes. A current liability is going to be in part 1 of the statement, operations. Long-term liabilities are going to be in part 3 of the statement, okay? Common stock is going to be in part 3, investments. Net income is going to be in part 1. Dividends are going to be in part 3. The current assets are going to be in part 1. The long-term assets in part 2. Contract accounts going to be in part 1. So I have you a template here, which is done to help you prepare a statement of cash flow. And so in part 1 is cash flow from operation. If you had net income, it's going to be here. If you had a net loss, it'll be a use. So you have source of fund, uses, net change. Depreciation is not a cash item, it is here. Decreases in a current asset are here, increases are over here. So if the current asset decreases here, if it increases it here, then our increase in current liabilities and decreases in current liabilities, then we take out loss on the sale of a long-term asset or gain on the sale of assets, and we come to the total for part 1. And the key thing you need to know is that when we're looking at cash flow from operations, the total from part 1, sources minus uses, needs to be positive. Cash flow from investments, we would love for this to be negative. That is, you purchase more than you sell. And then from financing, we will, sometime we're going to be getting additional money here, but we're hoping you're repaying your long-term loans, you're paying dividends. So that part 3 is negative, and then they all have to equal out to part 4. So this is a template which shows you where everything goes. So in preparing the cash flow statement, if we had this example that we were looking at, and this is the example we will look at next time, we look at the income statement and we look at all of these changes. So remember, we're looking at the change in cash through the change in everything else. And we're going to prepare it that way. So we're going to go back and prepare a cash flow statement next class period based on the financial statement. So that's how it's prepared. Now, this is different, but the only way you're going to be able to prevent frauds is if you can look at this statement. So it's different. A lot of time it was taught and people ignored what was involved and how to prepare it. And then they ignored it. And so when fraudulent activities occurred, they had a problem. So we'll stop here. We'll pick up on this on Monday. And we'll go through, we'll review this information again. We will look at this example, which you should look at in the primer. I think some of these pages, these pages are in Blackboard and course content also. And we're going to look at 2 things. We're going to look at this example, then we're going to go back to the example of Enron that we had. And we're going to look at it also and prepare a cash flow statement. And we're going to see if that tells us anything. So this is the first time you're hearing it. It's unique and different, but we're going to learn how to do it. And so we will go back over this. I'll lecture on this again. We will go through this example plus the Enron example on Monday. Then on Wednesday, each team will have a homework where they're going to do a cash flow problem themselves. So each team. And if you're working ahead, you can just do them in numerical order. Team 1 will work problem 1, team 2, 2, team 3, 3, team 4, 4, team 5, 5. So you already know what your homework problem is for next Wednesday. And then next Friday, ballot should be time, Buford should be time for an exam on this material. So we probably
Okay.
do. So everybody plan their schedule. Your exam was supposed to be on Wednesday, but I'm giving you time to work on this so everybody can do well on next Friday. So we won't meet this Friday. I'm going to put this problem in that I want you to work on. So, because you got to understand financial statements to be able to do this. And you need to be able to go through that accounting cycle. Okay?
Okay.
Yes, sir.